Mothership at Comcast. Earnings just out from our parent company. Adjusted earnings rising 13% to 86 cents a share, and that is above where Wall Street was looking for 80 cents. Revenue also topping consensus estimates. Revenue is up at this point 14% to $31 billion, and that was above the estimate that the street had of about 30.5 was what individuals were looking for. Then there's as there always is, think about what we're talking about with Comcast. We're talking about theme parks. We're talking about broadband. We're talking about networks, cable, Sky TV. Talking about so many different moving parts. And at the same time, when you have assets like that, you talk about free cash flow and EBITDA and a lot of different metrics that analysts that follow the company follow or watch closely. They have they have expectations for what the company's earned. The company is saying it's a great start for 2022, and the company feels it's in a unique position relative to peers. One thing we always look at, Andrew, is we're just obsessed in this business, and that's video customer losses, because the total relationship with customers rises every quarter, but people continue to watch as people leave the bundle, exit the bundle, cord cutting. It was video customer losses, 512,000 compared to 491,000 last year in the first quarter. But as the company, it is almost like a disclaimer in Fed speak, we are not chasing unprofitable subs. So that's what the company always says about why you do see people continue to maybe not decide to keep the bundle, and you don't see Comcast cutting prices to try to maintain those. But a lot of things, I don't know what else you see. Broadband net adds, 262,000. Customer relationship, total customer relationships, net adds, 194,000. Highest level of customer retention on record. And then some pretty good NBC Universal news. Revenue up 36%. 36%. If you back out the Olympics and other things, I think it was up 7%, excluding the $963 million in revenue from the Winter Olympics, $519 million in revenue from the Super Bowl. You've got media revenue up about 7%. And then it's amazing what's just happening at Universal. I'm talking about the theme parks for demand in the U.S. Up $941 million revenue to $1.6 billion. So that's like more than doubling on the theme park revenue, which I guess that shouldn't be that big of a surprise at this point either, considering that we're reopening.
And the real question over time, I'm thinking, we were just talking, when you think about all the folks who may be unbundling, is actually whether they end up rebundling in just a different way. Meaning, the way the count works, it looks like they're coming off, but in many ways they may be coming back on through some of these new things. We just talked yesterday about the JV with Charter, folks, who effectively are bundling through those types of systems, and on top of YouTube, YouTube Live and Hulu and the like, where you can get things like CNBC and ESPN and everything else.
Sky adjusted EBITDA increased 71%, and so now we got to factor that in and become experts on what's happening over in that area of the world for Sky. But one thing that I don't, and we are employed by Comcast, obviously, but in terms of the asset mix, Andrew, we aren't. Comcast is not like some of the. There are times when you think, "Wow, I wish I was more of a pure play in those other businesses." There's other times where you're happy that Comcast has all these varied assets, and you're not quite. Peacock's important, but it's not the end-all, be-all for Comcast. Cable's important, but you've got broadband, and so some people might prefer a more pure play, but then others would say, wow, it's got a different mix of assets that shouldn't have maybe. I don't understand why it's gone from 60 whatever. You can't see it there, but 45 from 65. It seems like it's the baby's being thrown out with some of the bathwater with some of the other media stocks.